It was around about a year ago now that I first picked up the IEX API. Over that year, I have on and off toyed around with what was available in an effort to find the best stocks to invest in, a formula, if you will. Today, I want to share one such formula with you, one that I started tracking in June, and as of recording, one that has bested the returns offered by the S&P 500 and the Nasdaq. I'm not all that creative with names, so allow me to introduce you to the Analyst Score. In the tiniest of nutshells, the Analyst Score takes in analyst buy, sell, and hold recommendations. It then weights those recommendations against the broader market. The broader market in this case being all of the stocks on IEX with at least 5 analysts covering them. From there, the stocks get letter grades, the best being A+, the worst being an F. I've tried my best to make it as simple and as readable as possible. The hard part is wrangling all of that data, so I'll spare you a look at my terrible Python code, but we can dive in here and take a deeper look at the results of the formula. My goal in creating this score was to ask, are the analysts any good? Should we follow the buy and sell ratings they put out? More importantly, should we trust their price targets at all? My inclination was to answer this question with a resounding no. Here, however, is a list of stocks that received A+ ratings on June 1st. I took all A+ rated stocks and ordered them by difference between price today, that today being June the 1st, and the price targets put forth by the analysts covering the stocks. These 10 stocks came out on top, so that's what I decided to track. In this column, we have the ticker and company name. Right here, we have the price of the stock as it opened on June 1st, 2020, and in this column is the average price target among analysts on June 1st. Now, the price today. I am recording this video on November 25th, so this is the price as of the time of recording. Now, as you can see, 3 of these stocks ended up losing money, but investing equally in this basket of stocks still beat every index over the time period, as we can see in this table. The Nasdaq was close, but the analyst score still edged it out. Now, I'm not suggesting that one blindly throw their money at this score, but it does seem to be a useful metric for discovering stocks that typically fly under the radar. Take Chicken Soup for the Soul Entertainment, for example. I thought this was just a book. It turns out that this book has pivoted into a wholesome entertainment company that is worth $200 million. And if an investor would have invested in this company in June, they'd have more than doubled their money. One thing I did notice about the score and about analyst recommendations is that the smaller companies tend to be the ones getting all the hype. I wouldn't want to speculate as to why that is, but I did want to narrow our scope down to larger companies, say over a $5 billion market cap. Let's take a look at some of those firms. As you can see, only 6 companies got the A+ rating that was simultaneously valued at more than $5 billion on June 1st. A quick note here on Livongo Health. The company was acquired by Teladoc in August, so I took the final trade price. This portfolio actually ended up returning 58% and annihilated the market. So it seems that sticking to those big firms pays off with the analyst score. I didn't just run this score in June and forget about it. I ran it on the 1st of July too. I wanted to ensure that I had a couple of months of data at different points to see how different the picks from the model ended up being. As the $5 billion mark appears to have been a good starting point, here are the stocks that the model would have suggested we buy in July. Yep, that's right. These are the exact same stocks, but we're missing a few. Not to worry though, these 3 still returned 43, 30 and 63% respectively, and we weren't sat in cash for a while. If we compare it to what the markets have done since July 1st, we can see that we would have done quite well. So where do we go from here? Well, I will keep running these numbers on a monthly basis and keeping track of how things shape out. I ran the scores today and I will share the results with you in a few minutes. I would, however, urge caution. This is purely experimental from my point of view, and I have found no reasonable way to backtest the findings we've discussed in this video. For me, I will be using the scores to guide further research. The A+ rated firms that have a market cap exceeding $5 billion appear to have offered excellent returns over the last half of the year. But that could always change. Always make sure to do your own due diligence. Alright, so how about the November 2020 picks? In the description below is a link to a Google Doc containing all A+ rated stocks along with their price targets, the number of analysts covering the stock, and those stocks' market caps. You should be able to take that data and play around with it in a way that makes sense to you, or use it to reproduce anything you've seen in this video. As for those A+ rated companies with over a $5 billion market cap for November, well, here they are. This is my first ever video on YouTube, so if you liked it, please consider subscribing to the channel. I'll be putting out more finance and personal finance related work as time goes on, and I'd love to have you along for the ride. Also, I'll be updating this analyst score and providing regular updates, so if you'd like to keep up with it, the subscribe button is somewhere below. Thanks for watching.